Hello everyone, this is today's video analysis for August 24, 2018. Today we're looking at the GBPUSD Great British Pound versus US dollar for today's trade analysis here on the daily time frame. We can see that this currency pair has been in a downtrend for quite some time. We're going all the way back to April 17, since April 17 all the way up here at the top of the chart into the mid to upper 1.43s. We've been moving down since then and tapping down here at the low not too far ago, August 15, so about a week ago or so. We hit the low down here into the mid 1.26s. Oh, nice downtrend here for the pound dollar. The question is, will the downtrend continue or will it reverse? Well, for the time being, we can see the black trend line coming down from the top of the chart, and the current market is holding underneath that trend line. So as long as it's under that trend line, I don't yet have enough confidence to say we've seen any reversal for this currency pair. In fact, as long as it's under that trend line, I think there's potential for us to see a continuation of the downtrend. So we want to watch for evidence of two things, either continuation of the downtrend or evidence of reversal. Now, in about 40 minutes from the recording of this video, we have some news for the U.S., durable goods popping up out of the U.S. We also, 10 a.m. today, have Fed Chair Powell speaking and could potentially cause some volatility for the U.S. dollar. And this weekend, Jackson Hole Symposium also potential to cause volatility across currency pairs. So we need to pay attention to that news as we look for our new trading opportunities. So downtrend, we're looking for one of two things: selling within the downtrend or information of reversal. Let's go ahead and zoom it in a couple of times here, and as we can see, a couple of days ago we tapped out into the high near the black trend line at 1.2935, made a significant fall yesterday from those highs all the way back down here in towards the 128 level. Today finding support around 128, that significant price handle, and right back up into 2850, 2890, the yellow zone. So again, the yellow zone comes into play as today's decision zone. One of two things is going to happen here: it stays under the yellow zone and the black trend line and goes back down, or it finally breaks the yellow zone, the black trend line, and starts moving higher. Those are really the only two things we need to try and figure out today. Now, if we get some good news, durable goods is positive for the U.S., this would go down. If it's poor news, potential that it pushes above the yellow zone. If the sentiment after Fed Chair Powell is positive for the U.S., this will turn back down again. If it's negative for the U.S., this will turn back higher again. So we need to watch that news as a potential catalyst for one of these two scenarios, either a bounce back down or a break above this yellow shaded area. Yesterday we studied some of the Fibonacci here on the chart. I'm just going to take a quick fib from the low to the resistance high, the current high, and that puts the 236 right here at 1.2870 is in the middle of the yellow shaded area. 382, 2830, we're just above that. 50% was 27.99, which is top of the orange zone. See, we bounced off the 50%, came back up now towards the yellow shaded area. Again, 236, 1.2870, a break above that. Looks for it to go back to the green zone, at least, minimum. The green zone becomes the resistance target, and we've already seen that. And of course, we already know that the orange zone is our support target. Let's take one more fib. Let's take Fibonacci from this last high right here, top of this little red trend line, down to our current low. And in doing that, what's interesting is that the 382 Fibonacci retracement low of that trend sits right here at the same place, 1.2870, the yellow shaded area, 382 fib. So staying underneath there, we potentially look for it to go down. Break above it, it goes back up. So we now have two distinct Fibonacci levels from two different ranges, downtrend and the current uptrend, right here inside the yellow zone, telling us that has potential to be resistance along with the black trend line. Orange zone also has some overlapping fibs down here as well. Now that we've seen that on the daily, let's take it down to the 4-hour time frame. And as we get down here, take a look at this price action. We saw it fall off yesterday. We noted that during the trade room, getting underneath it. We expected it to go down to the orange zone. Now we've seen support and rally right back up to the yellow shaded area. Again, Fibonacci in there giving us a clue to resistance. Historically, if you look at this little black circle, it's kind of hard to see it, but along the yellow zone, we saw congestion and support on the way down, potential to become resistance. Close as possible, 1.28. 75.80, I think, is where you're expecting your resistance for the day today. The worst case scenario, of course, is that it gets above the yellow zone. If we get poor news out of the U.S., we would expect it to get above the yellow zone. So if you're looking for an opportunity today, good news out of the U.S., positive movement for the U.S. dollar, we'll look for this to go back down. Selling into the yellow zone gives us an opportunity to target the orange zone, green zone, blue zone on the way down. If it's negative news and we finally get the breakout above the yellow zone, we'll look for this currency pair to start moving higher for the pound dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.